content of this podcast is produced for entertainment purposes only and is for informational and educational use. It does not constitute financial or investment advice. You should not make any financial decisions based on the information provided without consulting a qualified professional. All opinions expressed are solely those of the host and guest and do not reflect the views of any company or organization. The hosts and or guests may currently own, have previously owned, or intend to own securities discussed in the content. The content produced here belongs to Daniel Andreev of 18 Degree Journal and cannot be reproduced or used without prior permission. We do not wish for this content to be used for AI training and do not give such permissions. Hey everyone, hope you're all doing well. In front of you might notice you don't see me, but finally, after a lot of months in auditing, Vollos is getting into a more, we'll call it, concrete state. So trying to build here this exact tool for myself to do my research, to look at companies to study. Currently, if you look, this is the companies that we have started building datas on, slowly covering. My first couple steps, even though currently located in Canada, was to build in markets I find highly undervalued, and those that currently, at least I could trade on IBKR, right? Canada was a little bit it's a work in progress, so it hasn't really merged into the data set, but you can see it works on the States. Looked especially small cameras. The clusters you see is just kind of companies don't have in regulatory filings all the information we need to properly map them, but it's still a work in progress. We'll get there. But I was also focusing, in Ireland, on the Baltics. I was focusing in Europe, Central Europe, Western, Eastern, and the Asian markets. So today, kind of as an introduction, and to chance to introduce this logbook, to quickly go, and the whole point of this kind of notion of this channel, where I wanted to go, is a lot of the time what I do independently is I go through essentially A to Z, and I develop this kind of tool for myself to replicate what Warren Buffett and a lot of other investors did when they actually flipped through. For me, I know you can go on Bloomberg, you can go on TradingView, you can go, company by company, flip by flip, but I really relish the more, we'll call it more original experience of where you literally take a book and you flip cover to cover, finding everything. And the reason for doing it A to Z is because a lot of quantitative metrics that might make a company really attractive sometimes hide in accounting. And you have bad years, you have good years, and it's a way to look at more businesses, to find which kind of industries there are, what kind of businesses there are. You might have noticed as I've been going and auditing information, none of this is perfect and it's work in progress, so it's not released. So if you do click on the link below, you'll just be put on a wait list as we're hardening the product. And yeah, so as I was auditing and you found, I wrote an article in Sarman. There's another company, I can't pronounce it. Let me just have it in my notes. Just open my phone. Another company that had a lot of issue was Inzisoft, which also at the time I was around Sarman, I found it. I did not end up writing a theory to it, but there's a few. It's half on Alpha Police just because I didn't believe it. But as I'm going through it and it's getting better enough, I think it's almost at the state where we could, daily come here, check in, and replacing doom scrolling going through this. Of course, part of this project is also to replicate this experience on my phone. So if I have 5 minutes somewhere just to scroll, look, and to replicate these 2-minute or test whether or not you want to go through or flag any companies you actually want to look through. I'm also building out some other features on the platform that I just use daily, and it makes it easier, especially if I want to share with some of my friends, just to have a generated link that they all have the same view, and kind of created it, as well as, of course, portfolio trackers, just because I have multiple brokers, and to keep track of what I have where. I don't like Excel sheets because I don't like, first of all, I don't like the experience when you're working with it, but also you have sometimes very niche products and you want them updated, so it's a lot easier for me to do algorithmically, and it's just the UI end of it. Also, everything's a kind of work in progress, but the tool that I kind of introduced, market by market, you can see kind of the markets I currently have linked up, or started working on. We got Belgium, Czech Republic, Denmark, Estonia, Finland, France, a few global issues: Hong Kong, Hungary, Ireland, Italy, Japan, Latvia, Lithuania, Malaysia, Netherlands, New Zealand, Norway, Poland, Portugal, Slovenia, South Korea, Sweden, and United States. Even though they're listed and they're not all finished, I know for a fact that some countries are better, which is why I'm starting with Ireland. I know the Baltic countries are a little bit better. South Korea is better. The States is better. Japan's better. Mostly because where I've put a lot of my efforts into normalizing data and getting it structured. But also some countries have better electronic systems where they have more structured filings. So something I can build off. So today, kind of as introductory, saying hello, I just kind of showed the platform. We can just quickly go through all the companies listed in Ireland. And you can kind of see what we built here. It's very easy. You have 2 pages. You can flip page by page, see what you like, what you don't like. We'll go kind of from there. And the purpose is to, in a snapshot, understand what kind of business you're working on. We do have almanac spreads, which are also in work progress. You can see some stuff missing as I'm populating the data here and there and making sure that every data we have is auditable in the future. You can just double click and it'll open the source. So getting it also to that state, filling in a few information bits and pieces as migrating from, we'll call it, one database provider to another. All the information here should be except price data because, well, that's not regulatory filings, are taken from regulatory filings and annual reports. So there could be, we call it errors, which is why as I'm going through this, I see anomalies, I check, maybe there's a error that goes throughout that we can capture. The other, we call it caveat, is that there's different accounting standards around the world. Of course, a lot of the, we'll call it the Western world, developed world, who uses IFRS standards are similar. There's also US GAAP, Japanese acceptable accounting principles. Anyways, I've been rambling, but here's kind of what we quickly developed. Get the company, get the tick, CIK number, get the identifiers, quick descriptions. You have a little AI that went through basically the summary of all the information and creates you speed table what it thinks. You're not to like anchor bias, but just to have something, as well as comparison to all the industry metrics, so all the businesses that are mapped to being very similar. So at least, as you're going throughout the whole world, whether there's any point of actually looking at this company or not. Stuff that it flags for you to consider and kind of to, sometimes the numbers could really look good, but there's might be an issue. So sometimes it's a good thing to just have another we'll call a friend over your shoulder. You'll see some fields missing. Either they're missing because there's data issues when importing it, currency issues there's different rules I haven't decided fully which to go with. Or some businesses are just harder to calculate than others based on the data that's publicly available. So this company, AAB Group PLC, and we use 6 annual reports to capture it, and you can see them all here. You can click and it'll develop what you need from those years. So if we take the most recent 2025 report, you can see some revenue strips, net income strips, all scaled. So it's to scale, so they're scaled to each other. And we can see that this, I believe they're banking. Yeah, it's one of the largest banks, providing retail, commercial banking, lending, financial service, personal business, customer, and so purpose again, as I flip through it, look at it and basically say too hard pile or no, or should I spend more time on it later? So let's see if we can quickly go through Ireland. They only have 23 companies and see if there's anything for us to map or even like, or again, if we find any data anomalies, because I've been doing them basically by myself every night. And I think might be useful for somebody who just wants to doom scroll for a minute to see what it is. So quickly we go. I'm going to mispronounce everything as well, so apologies. So AAB Group PLC, as we said, it's AAB Group is Ireland's largest bank, providing retail, commercial banking, lending, financial services, personal business, corporate, and across Ireland and the UK. Personally, for me, I'm going to be talking my thoughts out loud. I find banks very difficult. There's a lot of sometimes of hidden liabilities or complexities that even CEOs don't know. So I have a very good anecdote, which I don't want to generalize, but I was talking to a fund manager out in, similar stories. One was in Austria, one is in Canada. And they had the notion of, during the great financial crisis, they had a very good, we'll call a strong relationship with a British banker who was the CEO of his bank. And they chatted regularly, tried to find problems, tried to understand, and they thought they had a really good grasp on the problem. And unfortunately, when the financial crisis happened and there's a lot of these hidden liabilities, the bank did really bad, and it was a really poor investment, even though they had such confidence in management and capital allocations. So they're usually very complex institutions. So personally, I tend to avoid big banks unless the they're, we call it egregiously overvalued, or there's a very good thesis behind it. So if we look real quick on the industry kind of metrics, how are they doing? So this is my kind of thought process next. So first we have their legal name. Let's see. So the market cap of the company is 24 billion. You call it 23 and a half. They're about 4.5 billion euro of revenue. To income, so about 50-ish here, we'll call it. They traded 11 times earnings. Yeah, return on invested capital 16. Share count 2.2 billion. They seem to be, seem to have a big jump. Did they recognize loss or not, but a big jump in revenue and earnings, so maybe they merged. Again, thinking out loud, but their RC also jumped, so there's quite interesting things there. If we quickly look, the stock has appreciated in value over the last year-ish. Probably to reflect growing valuations. Quick ratios we have. So it's 11. This all based on past data. 1.8 tangible book. And yeah, for banks, I know it's usually they don't become super, we'll call it attractive unless it's trading under one book for a huge margin of safety. There could be some data artifacts here. Margins 49. Return equity 16, 17. So it looks like there could be something interesting. Not much percent, which gives the company a room to absorb. Okay. Free cash flow is 8.54 billion. Oh wow. Supporting. Wait, why is it 8.4 billion? But let's look at what they're on their cash flows. So operating cash flows. Yeah, capex not going to be much. Wow, that is a big jump though. And more. What happened there? Well, that jump there. So it looks like they had a pretty good couple years coming out. It's probably had some one-time charge or something. Regardless, out of this 2 minutes, I don't think I'm super interested. So I will ignore the recommendation and keep going. Next data does not available, so they probably either went bought out or no longer publicly listed. Then we have Bank of Ireland, another banking group. Bank of Ireland's diverse financial services, retail and commercial banking, wealth management, insurance across Ireland and the UK. Okay. So on the metrics, a lot less, we'll call it positive colors. Quality B, value D, mode slim. Short profile, so 18 billion, so it's a bit smaller market cap. Revenue's a bit more, income's a bit lower, higher PE, at least tracking, return on capital less. Well, very quickly, as I said before, I'm not interested, but I'm just checking if there's any issues with their filings. That could be an anomaly unless they had some issues, so I'll flag it just to double check that I got everything extracted correctly. But I am not personally interested in this as an investment, so I'm just gonna move on. There's nothing screaming at any deal. Trading ceased. Okay, so we can move on right away. There's the capital structure. Right, so non-banks, I do have the EV formula working. That's great. But if trading ceased, no need to waste your time. Plenty of fish in the sea. Donegal Investment Group PLC engaged in the development, purchase, and sale of seed potatoes and the manufactured sale and distribution of agricultural products. Oh, that's pretty cool. So that's kind of one of the reasons I like it, just to see what kind of companies out there. The reason, by the way, if you have any excuse why I'm doing market cap trend, I feel it's a better reflection than share price trend, because you can issue shares, you can buy back shares, and to not distort all information. But if I'm looking here real quick, there's only data for 2019. So I'm wondering if this business is no longer trading. So just to flag it, if it's a data error or if it's a still public. Let's just see. If no, we gotta flag it. Oh, it's still public on the ticker DQ on the exchange. So it is. But they're delisted. Delisted double exchange, the Irish stock market before that. Oh, so they're gonna be delisted before. Okay, well, we can move on. but I will flag it just to check what was wrong. Okay, next one. We are on number 7 out of 23. Industry develops in virtual. The reason I see it flagging sometimes is there's different tiers of data, and sometimes it takes a while for the API to download it from the backend, which right now I'm hosting on a storage blob that is free. So my apologies for that. Engage's XR Holding develops the virtual reality collaboration platform Engage and Engage Link Metaverse for enterprise and educational customers. Okay, so data is also not 2025, just to confirm they're still in business. Still public. Still. Yes, they are. So another, we'll call it data issue. And do they have the 2025 reports? They do. The June. Oh, I think I gathered Irish data before June. So I will just need to retrieve data. So that's not a huge issue. But even before then, they are a losing money operation. So I'm not really interested. But I will note that I need to run the new year to get local information. 2025. So some of them probably released at other times. So multi-year, everything that goes. FD Holdings is one of the largest property and casualty insurers. These are farmers, private individuals, and businesses. Okay, cool. Anything that screams huge value. We don't have market cap probably because it is a smaller company. I'm just assuming. 400 revenue, 50 income. Flagged. There's some issues, and so forth those issues, so we don't have the information, so we can't gather the rest of the KPIs here. But it's okay. Cash flows are steady, but I don't think I'm really interested in this business. It doesn't really scream a huge discount, but we don't know what's the current market cap, so just to even know if there's a point of exploring it. There we go. It is a market cap of 755 million, so we do need to fix that just to get that here for data. So there's 7.5, so about 2 times, we'll call it generously under 2 times revenue. 755, what is their balance sheet? Let's look at their 0.37. Okay, liabilities of that. Sorry, I'm very thirsty. That's going, okay. I don't have total debt figures as well. Okay, so there's another one, error issue, that we will flag. So far the test is not going super successfully, but that is okay. This is why I did it. Technologies is a group that business comprising KX real-time streaming, analytics software, and first derivative capital markets technology and consulting. PCs filled here and tracking public issue, currently exploring coverage back to 2023. So again, I believe they probably just submitted their annual report later, so I will flag that and return. Different day. Net income is negative both years. Nothing's really screaming to me to explore it further. And again, there's so many companies to look at, sometimes it's just easier to pass on. Glanbia PLC is an international dairy, consumer foods, and nutrition product company. Okay, cool. Industry metrics. So their company has gross margins of 27%, operational margin 7, net 5.5ish, chairman's capital of around 9, and 4.6 on assets. Current day. Okay, well, interesting. I don't think it's a screaming value by any means. It's on the expensive side on earnings, but how did the earnings? So personally, just the quick skim of the analytics does not, nothing screams at me anomaly or a bargain deal. I just see there's some information missing that I will have to recapture. But that's okay. I think we're good to move on. But I see that there's price to book. Okay, so there's just multi-years missing. I'll get that fixed. 11. Runs alerting home builders, suburban partnership, and housing develops across Ireland. Okay. Nice recovery. Net margins of around 11, gross 22. Okay, that's a little more attractive than the previous business. Return on invested capital of 20, 15. Quick summary, everything's green. Let's call it promising. Enterprise value is below market cap, so they probably have a bunch of cash. I just hope the cash is not the home builders. Okay, so should be fine. It can be customers' cash. Again, got to check that when we actually do the study. This is just a quick speed dating whether we want to look at the company or not. Free cash flow yield of about 7.5%, dividend yield of 4.4%, 5. Okay, so far looks interesting. Let's look valuation. So here it is filled out. Okay, so there's probably some issues in the data. Implied at 11, price to book of 1.7, enterprise to sales about 1. Is that true? Yeah, about-ish. Operating income 6.7, books to tangible value. So price to cash flow 12 times. What about their free cash flow? So they had about operating cash flow capex of 10 to 90 million free this year. Last year they were in loss. Okay. Income 7. Okay, well, some promise. So I guess I will flag it for later to look at. Because it does have some promise. Okay. That's fine. Okay. So we're now about halfway through. We only have one-ish companies out of listings. That's fine. Hostel Group. Oh, it's Hostel World. I've actually used this platform. Hostel Group operates a leading global online travel platform specializing in hostels and budget social accommodations. Active 2017. So I'm a Hostel. I've actually looked at this company before, just as a preview. We'll call it curiosity, and they run the. I don't know if you've ever gone backpacking or traveling across Europe or much of the world. They run essentially the Expedia or Booking.com for hostels, and it's made more of a social platform where you can chat with people in that area where you can meet people before. So let's look. I remember I looked at this company a while ago to see if there's, we'll call it, anything interesting to look at the company. Anything worth flying. So they're trading about 25 implied earnings. Their market cap has, over the last year at least, fallen. So that's also interesting to note. 31.1% of that drop. Revenue has been essentially stale for the last 3-ish years. Net income is better than the previous time, it is, but worse than last year. Okay, probably less charges. To me, doesn't scream screaming deal, and I don't know if I want to spend more time in this company. I know I spent time before, so they have 12 million dollars. The free cash flow about 18, 20 million. The business about 177. I think there's just more attractive businesses out there, so I'm just gonna keep moving. That doesn't scream meal. Which again, I could miss a lot of things, but just to quickly, so cease trading. Kingsman Group PLC, low leader in high performance insulation and building envelope solutions. That sounds pretty cool. On the data loaded, they have over the last, call it, year going up about 30%. So good for them. Value D, so 18 billion. That seems a lot. Just to double check, I've just never heard of the company, so it's always nice to check whether it's a data arrow or I am. So yeah, it's 18.79 billion. So it's good that our information at least is all being captured correctly. EV of 14, so they have cash on hand. Installation and building up solutions. Cool. 28 earnings, 0.6 dividend yield, return on capital of 11. Operating history, we have growth. Net income is also going up. Return is stable or over 10%. Share count has been also stable, so they are not buying back shares. It's been an expensive stock for a long time, just based on the implied PE. They are trading at high. So it is an interesting company. I think I would do more research on it if the stock fell a lot more. But if they're just growing, maybe I should flag it. Let's see. Income statement. We also have it here. I don't feel like it's growing massively to warrant such a high valuation. Again, that could be a hidden asset, but at least for me, I think I'll prioritize my time until the next pass through. Okay, Kerry Group PLC. We are now Kerry's a leader in taste and nutrition, supplying ingredients, flavors, and integrated solutions to the food, beverage, and pharmaceutical industries. Pretty cool. They have gross margins of 11, 10, return on invested of 10, return on equity of 12, return on assets of 6, current, okay. So 13 billion, 12.5 in EV, revenue is around, so about 10 times difference there, so about, yeah, well, that makes sense. About 10, yeah. Apply P of 20, free cash flow yield not captured, so probably couldn't get from the filings. Business has slowly compressed, I want to say, and earnings have improved relative to the, I believe, all around. Share purchases have not occurred. Anything attractive? Personally, nothing is screaming a huge deal, just from a quick glance at all the information. I think this will be a current bust for now. But Ireland looks like they have a lot of very profitable businesses in the grand scheme of things, so it might be attractive to keep an eye on them if any of them get a lot cheaper to do further study on, or just, we'll see, maybe we'll do a little bit more study, but some of the businesses are on the margin of needed to be paid attention a little bit more to. Mincron Group is an Irish engineering group specialized in design, manufacturing, sales, service, and rock drilling tools and equipment. Very cool. Looks like data did not load for everything, which is good to know. Okay, and there's missing information. Okay, well, I'll quickly go through the rest. It looks like I still need to harden Ireland, but that's okay. Hopefully we have luck on the next pass through. I haven't done Ireland, just kind of did it on a whim today. And that's okay. This business looks like it's declining in revenue. God knows what they're doing. Purchase life science holding company that builds, invests in healthcare biotech businesses. Okay, so they could have hidden assets. EV is negative, so they're probably burning through cash. Yeah, yep. Investing. Probably had an exit here. That's pretty cool business, but I just don't think I want to get involved in something like this. So I'm just going to move on. Cease trading. Prudential TSB Group Holdings is an Irish retail SME bank providing mortgages, deposits, everyday personal and business banking services. So anything extremely attractive about the business? Not at a quick glance. So I think I'll just move on. But I'm just noting that it's missing a lot of entries. Rainer. Rainer. I'm a huge fan of the I've heard him speak, and I did have some thoughts about looking at the airline industry, and Rainer was on the top of the list of ones that at least I considered studying a lot more in depth. I did some preliminary studying on it because they seem to be in the right, we'll call it, headspace to compete in Europe and dominate. And the CEO is very ultra focused on proper capital allocation decision making. So I'm a huge fan of the company. I have skimmed it a couple of times, just never had enough reason to study it more deeply. But from our quick skim, and right now, of course, there's the added catalyst, at least those following the airline industries or stocks, that airline stocks have correlation with oil prices, and usually where oil prices spike rapidly, there's a lot of consolidation in the industry. And the thesis, of course, for a lot of analysts and managers looking in the airline industry is what happens after. So once prices normalize or stabilize and businesses calculate profitability and consolidate or buy out their competitors, better run businesses, of course, survives these volatile times better. So they seem to do once, we'll call it, quote unquote, normal conditions return to the marketplace, they seem to dominate and produce extraordinary results, at least historically. And there's a correlation because kerosene used for jet fuel suffers a lot from, well, the current, we'll call it, shipping bonanza happening in the Strait of Hormuz. So personally, I was interested in this company before. Seem to have broken data, so I will take a look more in depth into it. So wait, this is 2026. Oh, it's 26, so I do have some information. I do not. So PEG ratio 0.7. So flag it just because of that thesis, and I know I've been looking at the company before, and the purpose again is just to go quickly. So we will go on. Second last business, cease trading, cool, and last but not least, Uniphar PLC is a diversified healthcare service group providing pharmaceutical distribution, commercial supply chain, and Medicare services across Europe. Very cool. How are they doing? Net margins 1.7, gross, okay. 1.5, EV 1.2, revenue 3, net income 5. Oh, okay, so very thin. Did they always have thin margins, or is it just now? Income. Okay, so this seems to be a very, I don't like these kind of businesses where they don't have a lot of operational leverage, but that's fine. Apply 22. For me also, I do think you have to like the businesses you invest in, and if they don't scream something about them that you really like, becomes, there's that D ratio. Okay. Yeah. I don't think, excuse me, there's much to look at this one. Alright, well, that's Ireland. Again, apologies on the issues it has. I'll keep looking. I'll try to go through the Baltics soon, as I'll harden Ireland, fix Ireland up. And sometime this week, I'll go through the Baltics. And then we'll slowly start our drive through South Korea, and then Japan, and then the States. So thank you. Hopefully you enjoy this. Let me know if you're interested. If no, I'll just post them as my own personal archive as I'm going through this. The quality isn't exceptional at the moment. It's just to quickly go through them and have a record for myself. I plan to feed the transcripts here to AI and then see which companies I like last time. So each time I have a written record of what I kind of liked, I didn't like. Of course, the analysis here is really, we'll call it really rudimentary. Anyway, cheers. Thank you.